Welcome back to Investing Talk podcast. Today, we're sharpening our focus on Credo technology, a company that's really been making some noise in the tech sector. We're going to zero in on their upcoming earnings report, which is, well, highly anticipated. We'll look at what the market's watching and, crucially, what all this might mean for you. Our mission today is really to help you cut through the noise, understand what truly matters with these earnings, and, connect the dots so you feel informed and ready. Before we jump in, though, if you find these conversations valuable, please think about subscribing, maybe liking this, leaving us a comment. Your support genuinely helps us get these insights out to more people. And hey, if there's a specific company you want us to look into next time, just drop it in the comments below. We love hearing from you. And if you're feeling particularly generous, you could always consider buying us a coffee. Links for that are usually around somewhere. All right, let's get into it. Credo technology, earnings are on the horizon, lots of eyes on this one. What are the key details we absolutely need to know for this announcement?
Yeah, okay, so the timing is pretty specific here. Credo has set to report on Wednesday, September 3rd, 2025. That's going to be after the market closes. And then their earnings call follows at 5:00 p.m. Eastern Time. Pretty standard post-market release. Gives everyone time to digest.
Right after the bell. Okay, and the numbers. What's the consensus looking like? Revenue, EPS.
So looking at the analyst consensus, basically, what the Wall Street pros are forecasting, on average, the revenue expectation is hovering around $170 million. And for earnings per share, the EPS, which tells you the profit per share, right? The Main Street number there is $0.35. Those are the big headlines everyone will watch first.
Okay, $170 million revenue, 0.35 EPS. Got it. Now, are we hearing any of that whisper number chatter, the unofficial expectation that sometimes drives the immediate reaction?
It's always an interesting angle, isn't it? But regarding market sentiment right now, honestly, there isn't a widely circulated whisper number that's really different from that official analyst view. Market talk seems pretty much lined up with that $1.35 EPS consensus.
Huh. So no secret handshake number floating around this time. Everyone's kind of on the same page, expectation-wise.
Seems that way. It suggests, maybe less of an extreme undercurrent of optimism or pessimism beyond what the analysts have already put out there. A relatively unified view for now.
Interesting. Okay. What about the company itself? Last time they reported, did they give any strong guidance, or are we kind of flying blind on their own outlook for this quarter?
Well, if we connect that back, their commentary last quarter definitely had an optimistic tone, especially coming off that huge 179.6% year-over-year revenue growth and a strong EPS beat. But, and this is important, they didn't really provide super detailed, explicit forward guidance in their public statements. The fact they haven't, walked back expectations since then does hint at some internal confidence. But the lack of specifics, it just puts even more weight on this upcoming call. The market's going to be hungry for clarity on their outlook.
Yeah, right. They played it a bit close to the vest. So, past performance. That can sometimes give clues. What's Credo's history like with earnings? Are they usually surprising us or pretty predictable?
This is actually where it gets really interesting. Credo has a really impressive track record lately. Over the last 4 quarters, including that most recent Q4 25 report, where they hit $0.5 EPS versus the $1.27 expected, they have consistently beaten both EPS and revenue estimates.
Consistently, every time in the last 4.
Every single time. No earnings misses, no revenue misses in those 4 quarters.
Yeah.
That kind of streak is pretty rare. It suggests either, really strong execution or maybe they guide conservatively.
Wow. Okay. That is a strong pattern, almost like they're setting a beatable bar. How did the market react to those beats? Did the stock pop, and did those gains actually stick?
Yeah, the reaction has been telling, generally very positive. After that last Q4 report, the stock jumped up sharply. And importantly, those gains mostly held up in the following days. It wasn't just a quick spike and fade.
That's key, the holding part.
Exactly. And previous quarters also saw those post-earnings gaps up, where the stock opens way higher. And again, those gains tended to sustain. It shows the market rewarding those surprises, with investors seemingly holding on. We don't see evidence of sharp, immediate sell-offs after the beats.
So investors have liked the consistency. What about the underlying trends? Revenue, EPS growth, is it steady or more dramatic?
Oh, it's definitely been dramatic. We've seen accelerated year-over-year revenue growth. Like I mentioned, Q4 revenue was up almost 180% year-over-year to $170 million. That's explosive growth.
180%, yeah.
And EPS, equally rapid growth. Q4 EPS was way up from just $0.70 the year before. And actually, the current consensus for this report It anticipates something like the 775% year-over-year EPS increase.
775%.
Yeah, remarkable numbers.
All right.
And while we don't have super detailed margin data easily available, the trend noted is positive for gross margins and operating income. So it suggests they're getting more profitable as they grow too, not just chasing revenue.
Incredible growth rates. Okay, stepping back from the numbers, what about the bigger picture for Credo this past quarter? Any big news? Product launches? Anything specific driving this? Or just riding a wave?
It's a good question. What's the engine here? Interestingly, during this specific quarter we're looking at, there haven't been like huge splashy product launches or major company news hitting the wires that would act as a sudden new catalyst. However, what we have seen from prior reports and commentary is just really strong underlying demand, especially in cloud data centers and high-speed connectivity solutions.
Okay, so the core business is just humming.
Exactly. These are massive long-term growth areas, and Credo seems really well positioned. So it looks like it's more about ongoing strength in their main markets rather than a single big event in the last 3 months.
Makes sense. And zooming out even more, the whole sector, semiconductors, networking, what are the broader wins like? Are things helping Credo or are there headwinds they're fighting?
Well, looking at the broader context, the semiconductor networking space has generally seen a pretty strong recovery lately. There are definitely significant tailwinds. You've got the huge build-outs for AI infrastructure, cloud data centers,
Yeah.
all needing advanced chips and high-speed connections.
That's right.
In Credo's wheelhouse.
Right, the AI boom is a big factor.
Huge. Plus, those supply chain problems that plagued everyone, they've eased up quite a bit, letting companies actually meet the demand. Now, there are still those macro worries, interest rates, global demand jitters, but they seem to be weighing less heavily on these high-tech infrastructure players like Credo compared to, say, consumer gadgets.
So a sector tailwind seems pretty clear. And what about the analysts more recently? Are they still positive? Have they been raising price targets or just holding steady?
Yeah, the analyst consensus is still quite favorable. I mean,
Yeah.
it's hard not to be with those growth numbers in the beat history, right? We haven't really seen any significant downgrades. But it is worth noting, while sentiment's positive, price targets haven't really jumped up meaningfully since the last earnings cycle.
So they like the story, but maybe feel the current price already reflects a lot of it.
Could be. It suggests they're confident, but perhaps waiting for the next set of results and guidance before getting even more bullish on the price itself.
Okay, let's shift to the stock chart itself. How has Credo's stock actually been behaving leading right up to this earnings report? Any interesting technical action?
Yeah, this is kind of interesting. The pre-earnings price action. Credo's stock has actually drifted down a bit, about 3.8% lower in the recent sessions before the report.
Oh, down before earnings. What do you make of that?
Well, it's not necessarily a bad sign. It could mean a few things. Maybe some profit-taking after earlier gains, or perhaps just a little bit of caution creeping in, especially since expectations are still pretty high. Sometimes, stock runs up hard into earnings, and a little pullback like this can actually be healthy. Let's it consolidate before the actual news hits.
A little breather, perhaps. Okay, now the options market, what's it telling us? How big of a move are options traders actually expecting after the announcement?
Right, the implied volatility, that's the key question. The options market is currently pricing in about a plus or minus 13% to 15% move for earnings.
13 to 15%. Wow, okay. That's a pretty wide range.
It is. It means options traders are definitely betting on a significant swing one way or the other after the report comes out. And that kind of range, it's pretty consistent with how volatile Credo has been historically after earnings. It also fits with their track record of delivering pretty impactful results.
So the market's braced for fireworks.
Seems like it. While we don't have specific call versus put ratios here, that high implied volatility itself tells you the options market is active and expecting another sizable move. They know this stock can deliver surprises.
Okay, 13, 15% potential swing. So let's game this out. Best case, worst case. What are the potential scenarios we should have in mind for this report?
All right, the bullish case, that's usually the beat and raise scenario, right?
Right.
So Credo not only delivers another surprise on EPS, and revenue, maybe EPS hits, say, 0.40 cents or even higher. Revenue clears $170 million comfortably. But crucially, they also give really confident, strong forward guidance for next quarter, for the full year.
Again, this is key.
Absolutely. And any positive commentary about new design wins, bigger order books, or even faster demand for their AI and cloud stuff, that could really light a fire under the stock, validate the whole growth narrative.
Okay, that's the dream scenario for bulls. What about the other side? What triggers a negative reaction? The nightmare
A
scenario.
bearish case.
Yeah.
Well, that could be a miss on either EPS or revenue, or maybe even just meeting expectations but pairing it with cautious or wishy-washy or just slightly disappointing guidance.
So even meeting expectations might not be enough if the outlook is weak.
Exactly, especially with this stock. Any hint of a slowdown, maybe their big cloud customers are tapping the brakes, maybe margins are getting squeezed, maybe competitors are getting aggressive on pricing, any of that could trigger a really sharp negative reaction. It would break that pattern of strength and likely lead to a significant sell-off, given how much growth is already priced in. Even a small crack could be magnified.
Right, expectations are high.
So, boiling it all down, with all these numbers, the history, the outlook, what's the single most important thing for listeners to watch when that report drops?
If you had to pick just one thing, given the stock's valuation, its rapid growth,
Yeah.
it's got to be forward guidance, both for revenue and for EPS.
Forward guidance, that's the one.
Absolutely. Investors aren't just buying the past quarter, they're buying the future. Strong guidance signals the momentum continues. Weak or even just flat guidance, that throws the whole growth story into question and could force a major re-rating of the stock. It's the crystal ball everyone wants to look into. Makes perfect sense. Okay, so bringing this all together then, what's our overall leaning heading into Credo's earnings? Optimistic, cautious, where do we land?
Weighing everything, our overall leaning is, I'd say, cautiously bullish.
Cautiously bullish.
If I had to put a number on it, maybe a 7 out of 10 on the confidence scale, the reasoning is pretty solid. You've got that amazing track record of beats, the sector fundamentals with AI and data centers are still strong, and the analyst consensus doesn't seem crazy high, leaving room for upside surprise. They're in a good spot.
A 7 out of 10, cautiously bullish. But
Right.
there are always buts, right? Especially with a stock that has this kind of volatility priced in. What are the big risks or caveats people need to keep front of mind?
Absolutely. Big butts. While we lean bullish, that high implied volatility, that 13–15% expected move is crucial. It means the market already expects a big reaction. So downside risk is very real if growth slows unexpectedly or, as we keep saying, if that guidance disappoints.
Well, how might someone approach this, depending on their risk appetite?
Right. If you're a risk-tolerant investor, you might look at something like a call spread. Limits your cost and potential upside, but defines risk. Or maybe a small position just buying the stock directionally. But honestly, with that high volatility, you should really consider hedging with puts. Options that protect you if the stock falls hard. It's just prudent.
Okay, that's for the risk takers. What about more cautious folks?
For those who are more risk-averse, it might just be smarter to wait. Let the earnings come out, see the reaction, digest the news. If you still want to play the volatility itself, without betting on direction, you could look at option strategies like a straddle or a strangle. They profit if the stock moves big, up or down.
Right, playing the move itself.
Or, the simplest approach for the risk-averse is just don't hold the stock through the earnings report. Given the potential for a sharp drop if things don't meet those high expectations, sometimes watching from the sidelines is the best move.
Good advice. Lots of ways to think about it. So wrapping up, what really stands out for you from our conversation today about Credo? For me, it keeps coming back to that forward guidance. Past performance has been stellar, yes, but it feels like everyone is going to be hanging on every word about what comes next. That seems to be the real key insight that will drive the stock. It's not just about the rearview mirror, it's about the road ahead. Well, we hope this analysis helps you navigate Credo's earnings and maybe the broader earnings season with a bit more clarity and confidence. Thank you so much for joining us for this look at Credo technology. We really appreciate you spending your time with us. We look forward to sharing more insights next time right here on Investing Talk Podcast.